Yo, what's going on, y'all? Okay, so this is gonna be my first trade recap I'm gonna be posting on here officially, and it's gonna be on just today's trades. Okay, so this trade today on gold. This is just gonna be a gold recap today of what I was seeing and things like that. I know this is my algo layout, but I've been just trading and marking my charts off the algo layout just because I'm too lazy to switch around with my other layouts. You guys can see I do have a layout for every single type of setup I do trade. I would recommend you guys doing this as well, but you don't have to. I just think it's a lot more organized way of um, seeing your data if you want to do that, but it's definitely optional. And another thing I actually want to show you guys real quick before I get into this is right here. If you guys have like a plan, you should probably have a plan of what assets you want to trade, right? What pairs. So for me, as I told you guys probably already know, I trade euro, oil, and gold. These are my main forex slash futures pairs. And then I have SPY, which is ES on futures. I trade this mainly on my options trading account. I trade on Webull. So that is the broker I personally use. They are regulated, so completely fine with that. And I think it's FDIC insured up to 500K. So you're chilling there in terms of your money. But yeah, so that's basically it. I trade mainly forex and futures, these three, and then just SPY 0 day to expiration options. If you guys don't know what that is, you guys can read into it if you want. I can probably explain it later, but that's for people that want to trade options, right? So I have it split up into forex and then futures, and then this is just my overall. Uh, this is just my overall watch list right here of everything, but I don't really use this much anymore. I used to trade stocks, so yeah. Anyway, nonetheless, I mainly had used these two, and then once you start them, it's very easy to switch between your two watch lists like this. See, it's super easy. I recently found out about this star thing actually to switch between them that fast. I usually click on here, and it just took time, so it was annoying. But now you can switch between the two like this. I can probably label them something else so I can see the difference. But nonetheless, this is my futures. I have gold, euro, oil, like I said, ES, and NQ. I don't really trade NQ much, mainly ES. But yeah, so for futures, I'm gonna go something real quick. If you guys don't know, there's micro and there's mini contracts for futures. And minis are bigger. I think they're about 10 or 100 times bigger than micros. I forgot the size. I don't trade micros at all. I only trade minis based on my account size. So, but I know if you guys trade minis or micros, you just do MGQ instead of GQ, and then you can get the micro gold futures, right? I just have minis because those are what I trade. So this all depends on your risk parameters, but yeah, basically that's about it for that real quick. I just wanted to go over that real quick so you guys understand what my charts are. But this is my trade recap for gold today. This was okay, this was yesterday. Yeah. I can actually go over yesterday's trades too if you guys want to. I'll just do both in one video because why not? Basically on gold overall in the higher time frame, we are extremely bullish. Okay. So as you can see, I like to start on the 4 hour and 1 hour. And this was Thursday right here, roughly. We had a bullish leg up. I knew we were most likely going to be bullish because what did I say? When we take out lows, for example, we tend to have some sort of retracement, right? Mitigation phase back up. So that's what was going on here. We had a mitigation phase on the 4 hour. And look, we also have a very high confidence. We have this huge fair value gap here with, like I mentioned, what's most important. We have an origin up here, 4 hour. Okay. So this is going to get filled at some point. And I think that's where price is heading to right now because on 4 hour, all I see is this is an inducement because price never pulled all the way back and then break the low. Price just had an impulse, little correction, retracement, and then broke down. It didn't come back here. If it came back here and mitigated this, then I wouldn't consider it inducement, but this is definitely inducement based on what I teach you guys. So that's what I was seeing on 1 hour. Same exact thing really on a 4 hour. Didn't see anything too different. And then if we go on the, let's see, 15 minute, I think I didn't see too much here. So you always want to be switching time frames to see what gives the best, clearest picture. But you guys can see I have my indicator here for kill zones. Okay. I put this on my website for those that want it. You don't have to get it. It's fully optional. If you want, if you can program, you can definitely program your own. So it took me about like 200 lines of code, 100 lines of code-ish to make this one. The private point of interest, this thing that marks out all my zones. You guys can probably see, I can show it real quick. If I don't show only active zones, this thing took forever to program. This is a lot harder than it seems. So this basically shows and marks out every single zone um, on the chart, right? You know, when I say zone, I'm talking about the OBs, okay? Points of interest, our order blocks, not the fair value gap, not the gaps themselves. Remember, because the gaps themselves are not important to me. It is the order block that's most important. The gap is just a part of the definition of the order block, okay? So yeah, that is basically what this is. I don't think I'm gonna be selling this. I might. I don't know yet, but it just took so much time in code, so I might just keep it to myself. And then I can choose a different time frame to show up. So those will also mark out 5 minute order blocks on my screen as well. So pretty cool, pretty cool. But nonetheless, yeah, that is what that is for those that are interested or wondering what that is. But I don't have too much else on here. So anyway, let's get back to it. So this is my session start. Again, I told you guys my trading time from 8:30 to 11:30. As the first 3-hour kill zone, I mainly trade during those times. Sometimes I will trade outside of it if I have time. But yeah, so right here, if we go back here, just time, go up over here. I was just marking out structure, right? You can see we were in a downtrend earlier, previously. And I was marking these external breaks of structure like you should be. Okay, off the 15 minute. The 15 minute was bearish. And this is a perfect example of a high time frame reversal model that I was talking about that I showed you guys in another section, where essentially we create a external change of character here because we are now breaking structure to the upside, and we are essentially just going to be wiping out all this to the left. All this to the left is just causing retracements now. So we don't want to be marking zones here. You can, but you will most likely get tiny moves and you have much lower win rate. We want to be trading with the current trend. So the current trend is now bullish. The reason why I chose this as my change of character, you guys may know, this is not inducement here. This is a valid because it came back to the origin here, broke down new structure. So this is a new low, right? This should be a weak low. Price actually accumulated here. This is a very uh, strong pattern. When price tends to accumulate like this for a very long time, it means we're most likely on a higher time frame. We have some type of higher time frame QI here or demand, and prices accumulating orders to now break out and push back up, right? So that's essentially what happened. Price never broke this low. So this was supposed to be a weak low, but now it has become a strong low. Once this high broke, this low now has become our protected low, also known as a strong low. So that is where I marked my change of character on external. And then if we go to, I think let's go in the 1 minute real quick. Okay. So this breaking structure was pretty mid, honestly. It didn't mean too much because this reacted off the inducement. The POI OB is already down here, never came back. So that could have been inducement for sure. But it's only inducement until it creates its own inducement. If it creates its own inducement, then you can mark this as a confirmed break of structure, and you can trade from this range right here. Okay, remember premium discount? I don't really mark premium discount anymore, really, unless there's a huge lag of price, because you know the zones we pick and that we understand the origin of flips are mainly always in premium or discount, depending if you're shorting or longing. So not a big thing that I really focus on anymore. Right here, I had a 15-minute POI. This is why it's important to switch time frames. So I'm gonna turn off my kills real quick. Let's go in the 15-minute. As you can see, let's mark this more clearly. This is a 15-minute point of interest right here. Okay, you can mark either this count here or this entire block right here. This is our 15-minute demand. If we went on the 5-minute, you wouldn't be able to see this demand, right? You could, right? This is a 5-minute, but look how big it is. This is massive, right? You also want to know your pair. So I know for gold, 0.24% of gold or 54 pips is huge. This is a huge zone. I would never trade on lower time frame off a zone this huge. So this is why we had these moves here, right? We were reacting off the 5-minute zone that was massive, but we wanted to refine it, right? Usually when you refine zones, you go to a lower time frame, but I couldn't find anything on a lower time frame. So I went to the 15 higher time frame to see if there's anything missing, right? And there was a 15-minute point of interest, and that's exactly what price tapped into. This is the inducement that I was talking about also here. Okay. that after we broke higher, we created its own inducement. Why is this inducement, even though it never broke this high as well? Because when price is accumulating like this, okay, and it hasn't tapped into the extreme origin, is likely to get wiped. Okay, so this is essentially all just liquidity here that's about to get wiped. And you guys can see how equal highs and equal lows. This isn't really equal here, I would say. No, these don't really count. But you can see definitely tons just accumulating here, right? Waiting for this, you can set alert here. But I didn't set alert here at the 15-minute. I was watching my chart actively, but I do recommend setting alerts if you're gonna be away for some reason. And once we tapped here, you can immediately look for an entry. Like I tell you guys, the most important part of a POI is the start. I don't want to call it start. So like in a bullish POI, it's the top. And then in the bearish POI, it'll be the bottom part. This is the most important part. Why? Because this is exactly where the imbalance started. Okay. Meaning that's the strongest point of where orders were being filled to push price in one direction. So you guys can see it tapped perfectly. If you even want to see, the market is very precise, right? Especially if you're trading futures, it's even more precise because of the pip increments or price increments. If you know, you know. But you can see that the high on the top left corner of my screen, the high of this candle was 2319.64. Where's the bottom of this candle? 2319.59. That is super, super close to the exact same price. There has been times where I've seen the market literally taps the exact same price and then reacts off it. That's why I always have my TPs at the flip origin or external liquidity if I'm trading pro trade, right? Like right here. Because price just has to tap it and boom, it can immediately make the new move, right? That's the most important part. I don't some people teach 50% of the zone. I do that for mainly limit orders, but for this, I don't. Okay, if we're looking for confirmation, we just need a little tap. Once it tapped, we had a fair value gap formed here. Okay, again, you guys know I don't care about fair value gaps too much for entries or even anything. It's just a confluence as definition of our order block here. So this was, I don't really have anything here. You can mark this. You can call this whatever. This is an order block here, creating the U zone, and I had a limit order here. Okay, I wait for price to come back and tap me in, and then boom, TP. This trade lasted about 12 minutes. So 3R, almost 4R in 12 minutes. So really good trade. I typically round down just because of commissions and spread. It's not even that much, but I like to keep my numbers lower than what it really is just because I don't know. I don't like to calculate things too much, so or too high and be too proud of myself. So yeah, this is my first trade here. We took out the high, we made a new high, so then this would be you can see 5-minute break of structure. Now, for my external structure, like I told you guys, I usually try to mark them on the 5-minute or 15-minute. Okay, I don't really mark them too much on the 1-minute. You can, but it will be a little bit more messy. If you're not familiar with how structure really moves, some people might mark this as a break structure. This is completely wrong, okay? This is all internal to this leg here. So that would be completely wrong. This could be considered internal sweeps, yeah? Like, could be internal sweep, but not a break structure. So next trade here is, you guys see we ran way more, but it's all good. Next trade here, we had a flip zone right here. And why is this a flip zone? Because this broke previous structure here. This lines perfectly with previous supply. You guys can call this essentially like a zone that, like a break and retest zone if you want to call it. It's like a retail saying, but you guys can call it that if you want. It's like a break and retest zone here, flip right here. So I was either looking at we could turn off this indicator. I was looking at that 5-minute zone right here on the indicator, or this 1 minute right here, or this flip right here. And then we reacted off the flip, right? So what happened here was this is more of a harder thing. If you don't have access to seconds, you won't be able to see this clearly, honestly. But I paid for premium for 3 years, so I have access to seconds. It's not necessary. You don't need seconds to be profitable with the system at all. It just helps you see certain things you won't be able to see on the 1 minute. But I'm gonna show you guys how you see those things on 1 minute real quick. Anyway, we built a supply no demand zone on the seconds. And what I do is set a limit order there, or you can mark it execute when price taps here. I have my stop loss below here because technically you can see this as the whole entire seconds zone, and I TP'd at the high. You guys can see it just barely scratched the high, okay? So again, depending on a broker and such, it would have executed, wouldn't have. I usually like to have my TP like a tiny tad bit before if I'm targeting external, just because of spread and things like that. If you're trading Forex, if you're trading futures, there isn't really spread, but sometimes it does not tap you. It's just from my experience for some reason. So I like to have a little tad bit early. So just 6R for me. Really nice trade. This was a total of a 9-hour day or 9-hour session. And yeah, that's honestly about it for this trade. Isn't too much here. You could have refined this flip. I think this flip I had on 5-minute. Flip I think it was on the 15-minute I had, but or I moved it. I don't know. But you could refine it to a 1-minute right here. That would have been your 1-minute refined flip. Yeah, not too much here, honestly. Very simple trade. You could have your stop loss down here too. You would have lost about 2R though if you had your stop loss here versus here. It's a pretty big difference, honestly. 2R is a pretty big difference. So I have my stop loss below here. Typically, price should not break below the zone that created the OB. If it does, then the odds of it hitting stop loss when if it's here is most likely 9%. So might as well just gain the most R you can out of the trade. So to see this actually on the 1-minute without any seconds, what you can do is actually let me see. Is there a gap there on the 1-minute? There might be a gap on the 1-minute. But then there's a tiny miniature gap on the 1-minute. I would say that you would not be able to see that in real time. For being honest with ourselves, you won't be able to see that in real time. So my strat that I do for the 1-minute is you guys understand the buy to sell and sell to buy, right? I taught you guys that earlier in the course. This is a buy to sell. Fractal nature buy to sell in the seconds time frame. Part of this OB, right? Essentially, buy to sell, if I just want me to go over it, it is basically a two wick formation when there's an engulfing candle. So if there's engulfing bearish and it creates an OB with imbalance right here, this would be the buy to sell right here. And then you extend it over. These two wicks here, you select this wick and this wick as the top and bottom, and that is your buy to sell. And so right here on the seconds or 1-minute, we don't really have much of a gap that you can see, but you can see we do have a sell to buy here. Two wicks on both sides, okay, and we have an engulfing candle. And if you want to understand what's happening fractally, we are literally selling and then buying. That's what's going on. So you kind of move this, and boom, that will be your sell to buy on the 1-minute, and you would have entered off there. Sometimes there might be not a gap here on the 1-minute, and there might be a sell to buy. Those are a lot lower probability, I'm gonna say. They don't tend to hold as well. But in this chance, I just had the 30 seconds, and if I zoom in on 30 seconds, you can see that. So usually when price enters my zone, I don't typically go in the 30 seconds, but I did for this situation. So yeah. All right. Let's see what else we got. I think this is about all the trades for this session, I think. Let me check. Yeah, I think this was mostly all the trades I took for this session, unless I took something else later. But again, I was marking my structure here. You guys can see how perfectly reading market structure is, right? It's not going to be 100% guaranteed, but it is very, very, if you can read it properly, it's very, very good. You're able to anticipate where price is going before it gives any confirmation. The reason why they have to learn how to anticipate is because confirmation is kind of like an indicator to me, right? Not fully, it's better than an indicator, but it's like reacting after what price has already made part of the move is not the best. We want to know where price is likely to give us high quality setups, right? Before it occurs. So like for example, if you didn't know I'm not anticipating this change of character here externally here at all, okay, in this situation. You could saying that, oh, we actually did not take out this high, depending on your broker. And that means we had a failed break of structure, right? I taught you guys this. We have a failed break of structure that's not confirmed. It's not confirmed until it breaks this low. Since it broke this low, because this low was the one that's supposed to make a new high, we now transitioned. What happened? We transitioned bearish. meaning when we come back here, when price comes back, got inducement here. I have an OB here. You could be looking for trades here, okay? First trade right here, you probably took a break even here. I would have broke even here most likely. Remember, I have break even rules, either break even at 50% to target or break even at internal breaks of structure right here. Would have broke even here and then see price did one more sweep and then you can see you had a potential entry here. And then you would have targeted this weak low. This is now a weak low. Why? Because this is changing character now externally, right? So keeping track of that, you would have got a 6R here. Boom. And then a break even. Without kind of long, for example, these, right? If you didn't know or understand structure, you would have tried long these, and look what happens. Price does give you confirmations. It does react off these zones, even if they're going to be broken through. See, you got this reaction, and it just wipes you out. That's why anticipation to me is definitely part of the edge. I would say 50% anticipation, 50% reaction. But if you're able to heighten your anticipation and work on that in practice with more experience, you get even better and improve your win rate drastically. Because confirmation is easy. Anyone can wait for a OB new zone to be created within a POI, right? Or inverse fair value gap. Anyone can identify. That's pretty easy once you've done it a few times, or maybe a few hundred times. I've traded for quite some time, so it's all like pretty instinct to me. But yeah, so that's definitely something you want to be practicing, anticipating price. Maybe some days you don't live trade. Maybe some days you just watch the chart and see what's going on. And then from there, you can start picking up on certain things that you didn't see while you're live trading. Because when you're live trading, emotions get in the way. I agree with that. Emotions get in the way, and you might be blind sighted to what's really going on, right? You don't want to be watching every single candle when you're live trading. You want to be looking at the bigger picture, and once you have the bigger picture, then you have your certain zones that you anticipate, and then you have your alerts there, and then you wait for price to get there, and then trade your confirmations. So you guys can see I have my internal breaks of structure marked here. Okay, this is not as valid of internal break of structure here because, well, these are somewhat equal highs here. We never came back to the full mitigation origin, but that's okay. And then internal break structure, and then we had our external change of character here. And once you kept track of the external structure, we went bearish. And what happened here? Bearish really quickly, went for a higher time frame demand here, and then continued the higher time frame move up. So when we anticipate, let's see if we can find it right here. Uh, okay, in this situation, it just missed. This would be a sell to buy here off the 1 hour I would have marked. You can't, I don't think I see anything here on the higher time frame. You might have to shift to many different time frames. Uh, this 15-minute kind of was already mitigated, so I wouldn't really consider this. I mean, it got mitigated by the ticks, so I'm not too sure, but it could be depend. That's like a broker potential thing if it mitigates that close. So it could be have react off the 15-minute. But anyway, that is that trade. And then you guys see we external break structure. I did not mark like how I did not mark this as a break structure. Because if I mark this as a break structure, this is me telling me that I should be long from this. You definitely should not be long from there. I'll mark this ahead of time as pure inducement. These are things you have to identify in real time, okay? It's easy to do this stuff in hindsight, but doing it in real time also takes effort and skill. So I had this marked as inducement on a higher time frame. You guys can see how hard it is to see this inducement on a lower time frame. It's just too much clutter, too much noise. So let's see. Let's turn on my sessions again. This was New York session here. I woke up kind of late today, so I missed most of this action here. If we wanted to trade it, we could see if there's anything here. We took out inducement. This was inducement here that marked as a higher time frame. Remember, every single timer has its own inducement origin and flips, so you want to be keeping track of that. This was definitely a 1 hour inducement I mentioned for this 4 hour point of interest right there. Again, once we take out inducement, like I told you guys, we can immediately expect some side of move to the other side. So that's what happened. We took out inducement. Did that candle take it out? Yeah, it wicked it. Took it out. But I wouldn't be trading. You could trade this, for example, right here if you want to inverse fair value gap setup I see, and then you could trade it. But I wouldn't be targeting anything far until the session starts. This is why session timing is so important too, because you don't want to be trading and looking for the big move until a session starts, because this is all free liquidity. You're just gonna be taking out as liquidity. Okay, hopefully you definitely should have been broke even here. First of all, break even, so it would definitely not be a loss, but you would have got taken out by the 8:30 candle, right? 8:30 EST for me. Again, depending on your time frame. So I always time my trades after session opens every single time. There's some times where I don't, but those are like during London or Asia session where the candle is not as big, right? The 9 o'clock candle for Asia session is not as big, and neither with the London session either. You don't see much big movements, but the New York session, especially because the New York Stock Exchange, is huge. So you definitely don't want to get caught up in that. You guys can see price did another sweep before coming down. So here, today was a little bit confusing day to me because I was expecting this to be either a strong high, so I can draw some chart, either as a strong high or inducement. Because if you look at this here, this clearly could be inducement. Why? Because price never came back to mitigate what was missing, what was left behind before creating a low. So it was pretty uncertain as inducement. But also, this would have been a strong high because I marked this ahead on this is an internal sweep. Okay, we had an internal sweep, meaning this potentially could be a strong high because this broke this low. Because of if we didn't have this internal sweep or this fake change of character right here, right? Internal change of character, lower low, higher high, higher high. This caused a internal change of character. So, and then we swept it, right? So if we didn't sweep this or cause internal change of character, this would 100% I would consider inducement. But because we did, this could be a strong high to make a new low. So that was one of the mistakes I made today. That was very uncertain, but it came out to be a strong high, which is completely fine, right? It's all probabilities playing out. So I had a 30-minute POI marked out. I think I was on the 4 hour too. Yes, 4 hour. We had this zone right here. 4 hour. By the way, if you guys want to know how to use the magnet, just hold control on your keyboard and it just automatically enables a strong magnet. So yeah, pro tip right there. This is a 4 hour, right? You can see how big the 4 hour is. This is huge. I'm not gonna take a 1 minute candle entry off a zone this big because there's so much 1 minute candle movement that can happen. This could be like 20 candles in here, right? Everything has to be put in perspective. So I refined it. I refined it to two 30-minute PYs here. I had one down here and one down here. And then you can even refine it even further. What did we refine it to? We refined it to the sell to buy right here. Yes, there is no candle wick here, right? There's no candle wick there. But I would still consider this a sell to buy right here, even if there's no candle wick. Later, price will come back and create that wick. That's what's going to happen. Remember, missing wicks get created later on with price. So when price comes back here, factually, we now just create the wick for this. And if you guys think I'm like going too fast or things don't really make too much sense, I would recommend slowing down the videos, try to take notes, and ask questions also. But yeah, sell to buy, and look what happened perfectly. Perfectly tapped into the sell to buy. You see how exact this is? Let's remove the 3-minute POI. Look how exact this is. It perfectly filled 100% of the sell to buy. Okay? This is why once you learn this, you cannot unsee it. I'm telling you guys this. There's really just secrets to the market. It's not a secret to the market because you're not going to have a 100% win rate. You're going to have a 60, 70% win rate with a good RR and you're good, right? You'll make a fortune. I'll say that. As long as you keep consistently compounding. And the main thing is psychology. Don't let your psychology affect you when you're live trading. Otherwise, your analysis is going to be bad if you're not looking at the right things. So for this trade, once we tap into it, okay, I was looking to originally run this here, run this high. I had a break structure marked ahead of time as they started to run this high. But because of this here, I was unsure. I targeted this POI here instead. And because I'm also factoring in time of day using time theory. Okay. Look at the time of day. This is around almost session closing. So when I know around when the session like kills on ends, volatility decreases. So like the odds of price running and taking out that high is extremely low. Okay, price is not going to be able to make big moves when there's low volatility, and when there's low volatility, price is going to make miniature small moves, and it would take forever to hit that if I wanted to hold. So I was not planning on doing that. Okay, I don't like trades that last for a very long time, and this was already an hour and 30-minute trade, which is already extremely long for me. Most of my trades last 20 to 30 minutes ish, depends on the setup, but yeah. So this I took an inverse fair value gap setup. You guys can see body candle closure above, and boom, stop loss below here. Okay. And then I just targeted the 4-minute point of interest. I broke even here. That was my break even point. I did not break even here because this got really choppy for me. Okay. Extremely choppy. I didn't have time to also break even because as soon as it hit, you can see the next candle immediately came down to the point, and I was just like, okay, I'll just let it breathe, right? Because we also had an unmitigated OB here that just barely got tapped. And then I can read price fractally. I see this is a 2-minute OB here. This is some skill you can also learn later on when you get more experience. This is a 2-minute OB right here. And so that's what caused this move here. So broke even here, which is a good break even point. And it's because of the way candle closure. Remember, I said a break structure for it to be very strong and valid, either it's internal or external or change of character, it has to have body closures above on a higher time frame or just a strong move in general, right? These wicks right here aren't not high probability breaks of structure. This is a good break of structure. As soon as you see this and candle closure body above, you're good to go break even. Price should not come back here. If it does, you're most likely going to hit stop loss because price needs to leave some sort of imbalance to either act as liquidity or to move price later, right? That's what happened here. Price reacted, and you guys can see even if you trade off confirmations, you got a stop loss. So there's that. TP here, this zone was like weird. Okay, I saw this as clear inducement originally, but then I switched time frames. If you go in the 3-minute, there's a 3-minute zone here. Okay, and then if you go in the 4-minute, there's a 4-minute zone that's even better, more clear here. I usually don't switch to these time frames unless there's something missing, right? There's definitely something missing here. I could see on the 1-minute. This does take some experience to see, but on the 1-minute, this just looks odd. Okay, there's not something should happen. There should be some sort of imbalance above here, not here, but here above. This is not enough. There's definitely should be some sort of imbalance here. It wouldn't make sense for this to be fully unmitigated when price is acting like a when price is creating some type of V-shaped recovery like this. There should be something unmitigated here. Unless price is chopping around like this, then yes, it's possible there's uh nothing unmitigated there. But so I had switch time frames and I got it right. So nice trade there. Took a while. And then I was hoping actually I marked this wrong, right? Remember what Jay said about candle closures? This was a wick right here, wick closure, and price just reversed. At that point, at this point here, I had this in my journal as well. You definitely should be journaling your trades, but journaling this definitely depending on the strength of the break structure, you should avoid taking a zone like this, even if there was some type of confirmation. For this, I had a limit order set. If I waited for like a OB or inverse fair value gap entry, I wouldn't have taken this loss, but it's fine, honestly, to me. If the probability is playing out. So this was actually, instead of a break structure, this was a sweep. Okay. That was actually a sweep. This is only something you can really notice until price reverses strongly really quickly here. So you probably would have marked this as a sweep after you've seen this at this point. At this point, you don't know, right? We're going to assume this is a break structure here, but no. So here also, we had this low here that caused this high, right? This is internal break structure. This is another thing. Internal break structure here. Why is this internal break structure? We came back to the origin and there's no inducement left. There's literally no inducement. So this is internal break structure. And what happened here? Price did an internal change of character. So lower low, higher high, react off origin, I guess, flip, mid high, and then we broke this low. What does this look like? We clearly, here, this is probably a better example. We clearly broke the previous low that should be strong. Now it's a weak low. So because of the external change, we also had a sweep here. So this definitely got very, very confusing. This would have tricked majority of traders. So I didn't mind this loss here. But that was something to learn from, right? and then took the loss here. And since we changed internal structure, we can expect bearish price action to most likely wipe all this. I just had too big of a bullish bias based on this, but of course, price could still come back here and then push all the way up because we still have something unmitigated left, right? So, and that's the amount analysis for today and yesterday on gold. That is 2R on the day here, and then 9R. So that's 11R. Pretty good day, or pretty good 2 days, I'd say. Sometimes I trade Asia session, but I rarely ever trade London. I'll show you guys my journal later, but I rarely ever would trade London. I used to a lot. Those were like the grind days, but I don't do it anymore because I'm able to secure enough profit during the day from normal trading that I don't need to be spending too much time in London session trying to make more, right? It's not too much point to me. My time is a lot more valuable now, so I tend to not do that, right? And as your account grows, your profits grow, and you don't need to be catching as many trades and making as much profit in OR. So there's that. Anyway, that's it for this trade recap. Hope you guys did enjoy, and yeah.